Hi, I'm Lisa K. Donner, along with Andrew Moran, Sarah Calgill, Jeff Charles, and Graham Noble. And this is the Conservative 5, Liberty Nation's online TV news program. Earlier this month, a $42 billion bank run on Silicon Valley Bank led to its demise. Even including the Great Depression, this is the biggest single bank run in U.S. history. And the peeps out there, well, they're just getting a bit jittery. Banks are being gobbled up or rescued as another economic crisis looms. Andrew, you wrote on LibertyNation.com this week, quote, "If J.P. Morgan Chase, Wells Fargo, or Bank of America failed tomorrow, the U.S. government and the Federal Reserve would intervene," end quote. What does that say for state and local institutions?
Well, I guess it depends on who you talk to. So if you watch that March 22nd post-FOMC meeting with Jerome Powell, he told the American people that everyone should be rest assured that the deposits are safe. But then if you watch, which happened at the same time, Janet Yellen's hearing in front of the Senate Appropriations Committee, she said that she would not endorse a blanket insurance, a deposit insurance. So it really depends who you talk to. But politically, at this point, if a bank in the middle of Arkansas were to fail, the administration would have to bail it out, because the critics could say, oh, well, why would you bail at Silicon Valley? Oh, that's right, because they were wealthy depositors. They were companies who had links to the Chinese Communist Party. These were the tech bros of Silicon Valley that leaned left. So the optics of it all, the administration would have to bail them out regardless. But economically or financially, it would be impossible, because the argument right now in Washington is if you should have unlimited deposit insurance. But if you look at some of the numbers, the base deposit total number is $18 trillion. The FDIC's reserves is $150 billion, conservatively estimating. So overall, I mean, the bank system is in shambles right now.
Well, I don't know. Maybe you can tell me whether it was Yellen or someone else who said everyone should assume that their deposits are okay. Boy, that doesn't sound really, comforting to me. Should assume. Jeff, are you okay with that?
No, I'm not. And I'm going to borrow or steal a phrase from a brilliant economic mind named Liberty Nation's Andrew Moran and say this is what happens. SVB and these other banks are what happen when you subsidize incompetence. That's what's happening right now. I was on another podcast talking about this, and the idea that they're going to increase, or that they want to increase the amount that's going to be insured, it just gets the government even more involved. Why should these banks focus on running their operations in the best way possible? Why should they care about the consumers when they know they're going to get bailed out no matter what? So this is a repeating cycle. It's going to keep happening and happening and happening as long as the government continues to be involved.
Sarah.
Thanks, Andrew.
Sarah, take it away. Go ahead.
Okay, so I have a very wealthy family member, and so I was on the phone. I was on the phone going, okay, I have a friend who wants to invest $700 a month. He wants to take it out of his 401k and invest it in something that's going to perform better. So I call my sister. Okay, so that cat's out of the bag, and she gets on the phone with somebody she knows, financial planner, and I get a text back. He says, take the cash and stick it under your mattress and wait it out. So wow. I'm not sure anything's going to perform, and I'm not a big fan of keeping all my money in a bank. So I can't tell you, but people are spooked here that their little banks are going to go away, and that's we've got smaller. We don't have Wells Fargo branches or, the biggies. We don't have Bank of America anywhere near where I live. We have tiny little banks. They're community owned or they're regional banks, but they're not the big ones. So, people are a little more spooked in this neck of the woods.
If I might add something, if I might just add something to what Sarah said, there was a great exchange between Senator James Lankford of Oklahoma and Janet Yellen during a recent Senate hearing, and he asked that. He said that, could you guarantee that the small community banks in my state would be protected if they failed? And she said, well, no, I can't do her accent right now. I'm tired. But she said, no, well, only if there's systemic risks to the financial system. So thereby, in other words, no, you're on your own, but we're gonna shield our big banks and our well-connected.
Yeah, the little guys are gonna go. They're gonna be the minnows used as bait or whatever you want to call it. But the little guys are not going to stand a chance when it comes down to it, if this really goes really south.
South, yeah. What do you think heading down there in NOLA, and Graham?
Money is not safe, whatever you do with it, because the whole thing about, take all your money out of the bank and put it under your mattress. Well, that's all well and good, but then inflation eats away at that anyway. So how much your money is worth is going down, whether it's in the bank or not, you could say. And it was, of course, ultimately, none of this really matters, because once they push us all into the central bank digital currencies, we won't actually have any money at all. It'll all be theoretical, ones and zeros out there in the ether.
Well, Andrew, they just raised the interest rate 25 basis points yesterday. What does that do to this whole banking melee?
Well, Jerome Powell was actually asked that during the press conference, and he said that even if the Fed weren't to raise interest rates, credit conditions will be a lot tighter. And when credit conditions are tighter, and when an economy is 2/3 consumption relying on credit and borrowing, then that's going to slow down economic growth. You saw a lot of economists, whether even Goldman Sachs, which is pretty always bullish, they raised their recession odds after the collapse of Silicon Valley Bank. So this whole tightening, there was Elon Musk. He said that the Federal Reserve should have cut interest rates by 50 basis points. The futures market is actually, despite what Jerome Powell said, is actually betting that the Fed's going to cut interest rates over the next 12 months by 1%. So everyone's just not believing the Federal Reserve anymore, and they've completely dropped the ball on absolutely everything at this point. I like Jerome Powell. He's a nice guy, but he has to be one of the worst Fed chairs that in my lifetime, because nothing he's been doing has been right up to this point.
Well, this is a sticky one to fix, but our econ guru, Andrew Moran, who you just heard from, will have your back and keep you informed on the pages of LibertyNation.com. Thanks for tuning in, and thanks, panel. That's it for our Conservative 5 panel today. Check out our other C5 shows and segments on your favorite video platform, YouTube, Vimeo, Rumble. We're on them all. As well, Liberty Nation has its own Roku channel, where you can see all of our TV productions. Thanks for tuning in. And remember, surf on over to LibertyNation.com. Special thanks to our fantastic editor and post coordinator, Frank Diorio, and our executive producer, Sarah Cowgill. I'm Lisa K. Donner, editor-in-chief. Thanks for joining us today. This has been a production of LibertyNation.com, where truth matters.